There is a tax that was never voted on, never debated, never announced to you directly. And according to the Tax Foundation, it is costing your household $1,500 this year. It is called a tariff. And the way it works is specifically designed so that you never see the bill. It goes straight into the price of everything you buy without a single line item on your receipt. The Tax Foundation, the largest nonpartisan tax research organization in the United States, calculated that these tariffs are the single largest United States tax increase as a percentage of gross domestic product since 1993. By the end of this video, you will understand exactly how tariffs work, which of your everyday purchases are getting more expensive, who is really paying this tax, and what you can do about it. First, what is a tariff actually? A tariff is a tax on imported goods. When a company in the United States imports a product from another country, the government charges them a percentage of the product's value as a tax. The Trump administration and its supporters argue that the foreign country or company pays this tariff. But economists across the political spectrum agree that this is not what actually happens. The evidence is clear. The Federal Reserve Bank of New York studied this carefully and found that nearly 90% of the economic burden from tariffs has fallen on United States businesses and consumers. Foreign exporters absorbed almost none of it. A separate survey by the New York Federal Reserve found that roughly half of all United States businesses subject to tariffs simply raise their prices in response. They pass the cost directly to you at checkout. Now, where does the $1,500 figure come from? The Tax Foundation modeled the full impact of all tariffs imposed by the Trump administration and calculated the cost on a per-household basis. Their result, $1,500 per household in 2026. To be precise about what we know, this is an average figure. Some households pay more, some pay less. It depends on how many people are in your household, where you live, and what you typically buy. Larger families buying more goods pay more. Other research organizations calculated slightly different numbers. The Yale Budget Lab estimated between $600 and $1,300 depending on which tariffs remain in place. The Tax Policy Center found approximately $1,050. All agree you are paying significantly more. There is one more thing that makes this especially unfair. Tariffs are what economists call a regressive tax. That means lower-income households pay a higher percentage of their income in tariff costs than wealthy households do. The poorest Americans are hit the hardest. Let us make this concrete. Which products are actually getting more expensive because of tariffs? Goldman walks you through the biggest categories from cars to clothes to groceries with real numbers. Starting with the one that surprises people most. Category 1, cars. The Trump administration imposed a 25% tariff on all imported automobiles and automobile parts. Analysts estimate this adds between $3,000 and $10,000 to the price of certain imported vehicles. Domestic cars are also affected because their parts come from overseas. Steel and aluminum face tariffs of 50%. Everything made with these metals, cars, appliances, construction materials, beer cans gets more expensive when the raw material costs more. You pay for it even if you never import anything directly. Clothing and footwear. The Yale Budget Lab identifies these as among the categories most affected by tariffs. Most American clothing is now imported. A tariff on clothing from China, Bangladesh, or Vietnam directly raises the price of shirts, shoes, and children's clothes at your local store. Groceries. Prices of perishable goods are expected to rise first because supermarkets restock more frequently. Tariffs on agricultural goods from trading partners push up prices for coffee, cocoa, tomatoes, and other heavily imported food items. Your grocery bill is quietly climbing. Electronics. While smartphones were given a temporary exemption early in the tariff rollout, the Trump administration has signaled pharmaceutical tariffs of up to 200% and semiconductor tariffs of up to 100%, which would ripple through every device you own. Furniture and home furnishings. The Federal Reserve Bank of Minneapolis found that furniture showed some of the clearest price increases consistent with its tariff exposure. Prices for furniture and home furnishings have risen in a magnitude matching the tariff level on those goods. But here's what most people get wrong. Businesses absorb some of the tariff cost and do not immediately pass it all on. G. Morgan estimated that businesses absorb roughly 80% of tariff costs in 2025. But now, they are running out of cushion and prices are being passed on. Now, here is a critical twist you need to know. In February 2026, the United States Supreme Court ruled 6-3 that the Trump administration lacked the legal authority to impose its broadest tariffs under the Emergency Powers Act. Within hours of that ruling, the president used a different law to reimpose a 10% tariff on nearly all imports effective immediately, then raised it to 15%. Economists at the Peterson Institute said this puts tariff rates back to a similar overall level as before. Goldman Sachs economists confirmed that the bulk of businesses passing tariff costs onto consumers had already occurred. NEPR reported that consumers are unlikely to see substantially cheaper prices at the store, regardless of which tariff authority the administration uses. Let us be fair, the administration's argument. President Trump says tariffs protect American industries from unfair foreign competition, generate government revenue to reduce deficits, and will eventually bring manufacturing jobs back to the United States. Goldman gives you the data on that. The Tax Foundation found that tariffs have raised significant government revenue, but at a cost. Their own analysis shows that tariffs reduce United States gross domestic product by 0.5% and increase unemployment by 0.6%. The Tax Foundation also noted that these tariff costs risk offsetting much of the economic benefit of the One Big Beautiful Bill tax package, the administration's signature tax cut, while raising less revenue than a simple income tax increase of the same size would generate. Now the Goldman Invest part, because information without action is just anxiety. Here are 5 practical moves to protect your household budget from tariff-driven price increases, starting right now. Move 1, buy big items now, before more tariffs hit. If you are considering a car, a washing machine, a refrigerator, or any large purchase in the next 12 months, the evidence suggests prices on these categories will keep rising. Buying sooner costs you less. Move 2, buy domestic where it is actually cheaper. Some United States-made products are now genuinely more price competitive than imports because import prices have risen due to tariffs. Look at the country of origin label. It matters more than it used to. Move 3, stock up on shelf-stable goods at today's prices. If tariffs on agricultural goods keep rising, the price of coffee, canned goods, and non-perishable foods will keep climbing. Buying a few months of pantry staples now is a direct hedge against this. Move 4, review your budget for tariff-sensitive categories. Look at your last 3 months of spending. How much went on clothing, electronics, appliances, or imported food? Those categories are the most exposed. Cutting spending there saves you the most from tariff impacts. Move 5, build your emergency fund. Tariffs are inflationary. Rising prices erode your purchasing power. If your emergency fund is sitting idle in a standard savings account, move it to a high-yield savings account so it at least keeps pace with the higher prices tariffs are creating. Here's the bigger picture. Tariffs are not a story about trade. They are a story about your money. Every tariff is a price signal that starts at a port, flows through supply chains, and eventually lands in your shopping cart. The question is not whether you pay. The question is how much. The families who navigate this well are the ones who understand what is happening before it reaches them. You just got that understanding. Now act on it. Subscribe to Goldman Invests. Next video, the recession warning nobody is talking about, and 5 specific moves to protect your money if it arrives. Follow the money. See you there.